friends, let us start today's analysis. Today is 12th September and usually what we do is mark important levels for previous day. Previous day was kind of sideways day, and then at the late afternoon the market failed till Virgin CPR. So this line here is the uh, PDL, previous day low, and this is previous day high, and that's it. So today the market opened and the CPR is kind of average CPR. So what happened, as we start from the first candle is a red candle, but this candle is in no man's land. Like this candle is not at the important level, so there is no trade on the first candle. The second candle is within the first candle range, then there is no trade here, although third candle broke the first candle high, but it closed below this pivot, so there is no trade. Then rest part of the day, when like the market came down, and then this candle, 10 a.m. candle, is a proper bullish candle and taking support from CPR plus the 20 MA. You can go long here, but there is no good risk reward. Suppose you take a trade here, your stop loss will be below the central pivot, but a day's high is here, so that is not even 1:1 risk reward, so there is no trade. Why I say days high? Because days high, days low at the time of taking support or trade is very important resistance or support. So this level becomes important resistance here. Now if you see rest part of the day, like it was sideways day, whole day try to take the support at CPR. Whenever this kind of setup happens, this is a kind of long consolidation. So one thing is for sure, today was the expiry for Nifty, and this is a long consolidation at the important level. The CPR is an important level, so the market is more likely to blast and go in one direction. It can be upside or it can be downside. If you are experienced traders, you can predict that market will go up today, because there are few important reasons. Like if you go at the daily time frame, so what happens here is the daily time frame shows you, see here, this candle, this is 12 September candle, and it shows you that there is a 20 EMA on daily time frame. This 20 EMA on a daily time frame becomes a very strong support or resistance. So when the market was getting consolidated in this range and market opened above, this means that this 20 EMA will act as a big support here. So this is how you can predict that market can go up. So this happens with experience, and along with the 5 minutes intraday time frame, you can watch daily time frame also. I will include daily time frame more often in my videos, then you will understand how to make use of daily time frame. And even if you are not aware of daily time frame, as soon as market takes supports here, and this candle, you see this is a big huge candle which breaks the this consolidation zone, this high, and then the previous day high also, one can go long. And as I told you, on the big candle usually you should avoid taking trade, but here you can take trade because it is a expiry day and it happened in the late afternoon at 2 o'clock. And to save your risk, for sure you cannot enter here and keep your stop loss below the candle. That should never be doing in while trading. When you enter here, you should have your stop loss small. So stop loss, but stop loss should be below a strong support or some level, so that the stop loss is safe. So you have this level here, PD H, or you can have usually what we do is, when you take a trade on the long candle, you take the stop loss at the 50% of the candle, somewhere here or below this, and that is also big stop loss. So I will advise keeping stop loss here, and twice the stop loss, or then you can trail the trade. Trailing the stop loss means riding off the trade is okay. Once this candle is formed, you keep the stop loss and shift it to below this candle. When this candle is formed, keep the stop loss here. When this is formed, below this. When this is formed, below this. Like that, I think you will end up, your stop loss will be taken by, I think, this candle. Yes, this candle will take your stop loss. So you will get from this point, this top, till this, you will get this big point while trailing the stop loss. So this is how you have to trade. This will be your entry and this will be exit. But before this candle is formed, during this consolidation itself, you can predict that the market will go up, because this is trying to take a support on the 20 the CPR, daily CPR. Moreover, it is trying to take the support on the 20 EMA on daily time frame. So hope this is understood. Now since I am making this video on 13th, sorry, on 14th, so I will analyze on 13th September also. So let us mark this high and low for 12th September. Now this is high and this is low. Other than this, there is this important level also, which is called turning point. Turning point is usually once the line is broken, once the point is broken. So this becomes, whenever the market comes here, then this will be a strong support. Now in this case, on 13th of September, you see market opened exactly at the high, previous day high, PDH, and from there it formed a bearish candle, the red candle. But there is no trade here because immediately there is CPR, and the CPR is kind of white CPR. So white CPR usually means sideways day or reversal day. So there is no trade here. The second candle broke the first candle low, but again there is CPR, and this is back to back candle, so there is no trade on the second candle also. Third candle, no trade. Fourth candle is taking a support from the CPR. You can go long here, you can go long here. The stop loss will be below the central pivot, and this is the huge stop loss with respect to the target. If your target is like PDH would have been top, or first candle high would have been giving you the 1:2 risk reward, this can be your entry. But from here you don't get even 1:1 risk reward at the high. This should be your target, so avoid entering here. Even if you enter here, you should exit at this point, and stop loss is here. So rest part of the day, you see this is sideways day, as I told you. Very wide CPR means usually a sideways day. And one more thing to remember, that if there is a big upside on the previous day, there is more likely that second day will also not be a trending day. Second day can be a reversal or a sideways day. So there is no trade here unless this top is broken. This candle top is broken, and it is not broken. Complete rest part of the day it was sideways. Even if you enter here, I told you the stop loss should be here and the exit should be here. But since it is not a proper risk reward, I will not recommend entry here, and there is no entry in the other point of view. So that's it, guys. Thank you very much. Bye bye. Take care.